Hello everyone, my name's John Locke and I'd like to welcome you to The Winning Trade, but first the required disclaimer material. This presentation is given for educational purposes only. We're not broker-dealers or financial advisors and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial and please make sure you are aware of all your risks prior to placing any trades. Also note that in the presentation we are going to be doing hypothetical computer simulated trades and results. They are believed to be as accurately represented as possible, but keep in mind that live results can vary from simulated results for many, many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance and success coach with Locke in Your Success LLC, where myself and my team are here to help you win in life and in the markets as well. And today I'm here to guide you into the realm of high probability income trading. Now in a moment, we're going to be going over the winning trade, but before we do, let me quickly explain what I mean when we talk about an income or high probability trading strategy. In income strategies where we put ourselves in the position to generate profits through the passage of time rather than depending solely on price movement to move in our direction, meaning we can often make money whether the price goes up, down, or sideways. Now this doesn't mean we're going to win all the time, but this does mean it puts the probabilities of us winning much higher into our favor, meaning we can win more often. Now, when you find that you want more information as you're following along, simply contact us at lockeinyoursuccess.com. That's L-O-C-K-E in yoursuccess.com, or ask a question in the comments on this video, and we can direct you to where you can find more information. All right, so let's move on. The winning trade we're looking at today is called the M3.4U. Now, the M3.4U is a market neutral trading strategy that I developed as the core strategy for our traders in our trading success blueprint. It's a stage 3 strategy, meaning it's very rule-based. It's also relatively simple, and being our core strategy, it's also extremely effective in the marketplace as an income strategy. So with the trade we're doing today, we are using a planned capital of $5,000. This trading strategy requires a minimum of $2,500 to trade it. We're going to be doing a 2-lot, so that's $5,000. With a $5,000 position, we have a maximum loss of $500, and the strategy does not have a profit target, meaning that we're going to trade the strategy until it's time to exit it, which is essentially expiration, or if it no longer makes sense to be in the strategy, or if we happen to hit what we call our exit loss trigger at $500 down. So let's take a look at this wonderful strategy. All right, so the trade we're going to be going over today is going to be the October 2020 expiration. This strategy is started 56 days to expiration, meaning we're going to be in our October 16th, 2020 options. And for those of you who have not seen this type of software, this is what we call an analytical software. It shows the options expiration cycles across the top here. We're doing the October 16th, 2020. It's 56 days to expiration. This is the current date on entry is Friday, August 21st, 2020. And down the left side here, we have our strikes. The calls are on the top, the puts are on the bottom. This shows our asset price. Down here, we have our profit and loss. We have what's called our delta, or the risk of, or the dollar risk for each dollar of price movement at its current level. And then we have our theta, which is how much money theoretically we're going to be making per day. We have other numbers here too, but let's move on. Across the bottom here, we have our asset price. Up and down on the left side, we have our profit and loss. This triangle shaped thing here is what we call our expiration line, or the value of the position at expiration, meaning if we were to do nothing here and the asset were to expire at 1530, which wouldn't happen by the way, but if that were the case, then we have a profit of approximately $9,000. If we were to do nothing and let it expire and the asset price went to 1650, for example, we'd be looking at a loss of about $500 or $600 here at its current rate. And here to the downside, we have a potential loss if the market were to go down of about $2,500. It also means that we have $2,500 in the position. So we said we had a planned capital of $5,000. Well, as this trading strategy progresses, if we have to make certain adjustments, we may be increasing the capital. We'll never increase the capital over 5,000. In fact, this position here rarely gets over 4,000. We don't usually let it go over 4. But we're using the $5,000 as a basis to determine our exit loss trigger and as a basis to determine our profits on this particular position, even though the actual amount in the position is going to be a little bit variable. So this curved line here is called our T+0 line, and it represents the projected profit and loss of the position at any price point as of today in the Russell 2000. Right now, it's saying that we're down $8, and as I scroll on this, if you look at the top number, it gives you the asset price in black, and then underneath it, it gives you your profit and loss, or your projected profit and loss. You see if the market price went all the way to 1650 today, which would be a monster move in the Russell, by the way, that would be 100 points, then this is projected to be drawn down $146. Over time, this T+0 line that is curved here goes towards our expiration line, or it will rise in certain places, it'll drop in certain places. Our job here is to keep this in a position where it's going to continually rise, making money through time. So as far as adjustments here, they're pretty simple. We have a delta of +4 for this position size. That's going to be a maximum positive delta. We have a maximum negative delta of -3. Once we get outside our long strike here, then that delta numbers are going to reduce to 0. In other words, the position is going to be what we call positive delta outside the tent on the right side. If the market goes too low, we'll end up rolling this back and restarting the position essentially. So let's take a look at how this goes, and I'll just push this through day to day. So it's Friday, August 21st. And you can see, just in one day, we went up 10 points here on the Russell, and now we're a little bit profitable here on the position. Everything's normal. Same thing here. We went up a little further. Again, we have a maximum delta of -3. We're only at -1 here. So let's move forward. So now we are Wednesday, September 2nd. And what happened here is the market's been going up, and we're still at about 0 profit and loss here. We really haven't made any progress yet. And the asset price went outside of our long strike. So our long strike is this 2 right here. It's at 1580. The asset price is currently 1589. When we do that, we shift our delta limit to 0 essentially. So what we're going to do to get our delta down, let me just drag this up, is we're going to take these options, these 1580s, we're going to move them to 1570. And we'll do them one at a time. So here we just did 1, and then we're going to check to see what happens. Well, it brought us to a 1.35. That's still within our delta limit. The thing you also want to notice is when you move this option, you also increase your capital level. So I'm going to take this off for a minute. You can see here our capital level in the position is about 2,500. After we make that move, it's about $3,200. Okay, so let's move forward with this. Whoa, right, now we get a big down move. So this happens from time to time in the positions. You'll just barely hit an adjustment trigger, which is what we did here, and then sometimes we'll get a fairly big down move, and this is really almost a monster down move for the Russell. 53 points. If I told you the Russell went down 53 points, say 2 years ago, you'd be say, wow, that's one of the biggest movements it's ever made in history. I mean, it's made bigger movements recently, but this is, even in today's standards, this is a pretty big move. So there's really nothing to do here. Our delta is still normal. It's 376. We have a maximum of 4. This does draw us down a little bit, again, because we were positive delta and we had a pretty big down move with what we call an implied volatility increase, and that's where your drawdowns will come. But as long as the market doesn't shake you out, these work out really well. So let's see what happens the following day here. Just worked back and forth during the day, right? These red dots, by the way, are, and sometimes they're green, are the price movements during the day. So during the day, it shot down here to about 1500, and then it was all the way up to about 1564. So that's a pretty wide range day. That's 60 something points. So we had some volatility, but essentially the market didn't move. And you can see what happened is the price recovered really quickly. And that's what happens with these positions. When the market stalls, we get a nice pop in value. So that was the 4th. If we go to the 8th, all right, so we had an adjustment today. So what happened here is the Russell came down and we hit our positive delta limit. So what we're going to do with this strategy when we hit our positive delta limit is we're going to attempt to flatten the delta out by moving our long strike higher. So here, I'm going to take this option, I'm going to move it back to the 1580, right? Very, very simple 5-minute adjustment here. And that brings our delta down to a reasonable area. So what we're going to do is we're just going to take this trade-off, and this here is what our new position looks like. Okay, so let's move forward here. All right, we get a nice bounce in the market here. Now we're up $93, and we're back into the center position. We're positive 1 in a delta, so everything's looking good. If we move forward the following day, again, we get pulled back a little bit. And the market pulled down, and now we are positive 5 delta. So we're positive delta again. We're going to do the same thing. We're going to just take this here and bring this up. And that is going to bring us to, in this case, 2.23. Let's take a look here. So here's our adjustment. Again, we're pretty much at break even so far. The market's kind of choppy, been moving around. Let's go to the following day. We get a 35-point up move. Our profit and loss recovers again, 176. We're minus 2.75 delta. That is less than -3, so we will leave it alone. All right, so here we are on September 16th, and we are to negative delta. So we're going to roll this back. And this is our new position here. So let's just go day by day with this. Boy, we're making some good progress here on the 18th, right? But the market here, as it has been this year, particularly back in the September range, we've had a lot of back and forth price movement, and we get hit with another monster down day on the Russell here. We're actually down at this point 55 points on the Russell, so that's big, and that gets us down to a $49 profit. So obviously our delta here is too high, it's too positive. So let's take a look at rolling this out. That brings us to 851. That's still too high. Let's try 2 of them. Now we're a symmetrical butterfly, and our delta is still too high. Plus we're outside the tent, right? So at this point here, what we're going to do is we're going to have to move the butterfly, which is fairly rare. It's pretty uncommon for us to actually have to move it. But in this case here, we're going to do that. So what we'll do is we're going to close this position out. And we're going to roll back here to our 1460s. And we're going to do a 60-point wing to the downside. 1, 2, 3. And a 40-point wing to the upside. We're going to check our delta. We are actually too positive delta with this, so we're going to try 1 and 1. And that's going to bring us to 3.18. That is an acceptable delta, so why don't we run with that? So let's commit this, and we'll hit save. And this is going to be our new adjusted position here. So let's move forward and see how this goes. A bit of an up move the following day. 36 points down. Again, we are a little too positive delta here, so let's try widening this out. That brings us in range, and this is our new position. We're good here. So look what the price chart's doing. Right, we've been through a lot with this. We've had a decent down move. We got hit hard here to the downside, then we had a bit of a bounce. We got hit again hard to the downside, and now we're kind of trending down a little bit in the marketplace. But we're still doing okay, right? We're still up $106, which isn't bad for what we've been through, and the fact that we're only a $5,000 position here. So let's move forward. All right, so now we are at 15.1063. We're over our long strike, and we're much past our maximum negative delta here. We actually want to be 0. So let's see if we can accommodate for that. Oh. Okay, so here we are with 1.97. We're over $4,000 here, so we're not going to be able to make another up adjustment without reducing that capital. We'll show you if that happens. So let me commit the trade. Negative delta again. So what we're going to do here is we're going to roll this up, and that's going to give us positive 360, but it also puts us too close to our $5,000 limit. So we're going to have to, or I'm going to want to move this. When I do that, this is acceptable, slightly positive. So let me commit the trade here. And this is our new position here. Now we are solid negative delta now that the market's gone up. So let me go here. We're still okay to the downside. So this here is going to be our new position. Once again, we drop negative delta. Roll this in again. Again, our capital gets too high, so we're going to have to take a look at rolling this in. And we're negative again, so -2 and +2. This puts us at positive 1.79. That's in our range that we want to be. This is our new position here in green, so our old position is blue, new position is green. And we're going to make this little single condor adjustment here. Now we're only 7 days to expiration, and at this point here, you could either close this position or you could let it expire. Generally, I'm going to tend to let it expire. There's really no point in doing any more adjustments because there's no time premium in here. Unless, of course, the market comes down a little bit, then we might be able to adjust up. But as of right now, really nothing to do here. And we would just bring this into expiration and let this expire at a profit of about $246. Now that's almost 5%, so it's just slightly under 5%. On average, this typically on a winning month typically runs between 5 and 8%. It gets wins as high as 25%, so this is a little less than what we would call normal. But take a look at what's going on with the price charts here. We went through a very substantial down move in the asset, and then look at how the price just kind of ripped up with this reversal. And people who are having challenges with these down run-up reversals and so forth, this trading strategy tends to handle these very, very well. And that's why we use the M3.4U as our core strategy in the Trader Success Blueprint in our memberships at lockingyoursuccess.com. So that's the M3.4U, this episode's winning trade. If you like what you see, I encourage you to join us and discover how you too can follow along with this and many other great strategies as they unfold during our Options Trading for Income webinars. And where you can also learn about upcoming winning trade presentations, and perhaps best of all, you can get information on our Trading Performance podcast, where you can learn to become a much more effective trader regardless of the type of trading you do. If you have any questions or comments or anything you'd like to see on the next winning trade, we'd love to hear from you. Simply comment on this video below and we can get those questions answered for you. And we would also encourage you to come on over to thewinningtrade.com, where you can find fantastic information on past episodes of The Winning Trade, as well as a lot of other bonus information on how you can profit through income trading. And please remember to subscribe and comment on our YouTube channel, where I will personally answer any question that you may have. Thank you, and I look forward to seeing you on the next winning trade.